Imagine you walk into a grocery store. You pick up a bottle of Coca-Cola, a box of Kellogg's cereal, and some Johnson & Johnson soap. Then you head home, jump on your iPhone, scroll through Facebook, and maybe order something on Amazon. To you, these are all different companies competing for your money. But if you look behind the curtain, you'll find one name at the top of the shareholder list for almost every single one of them. That name is BlackRock. They aren't just a big bank. They are the world's largest asset manager, and as of 2025, they are overseeing a staggering $12.5 trillion. To put that in perspective, that's equivalent to more than 3/4 of the entire US GDP. They have been called the world's largest shadow bank and the company that owns the world. But here's the thing. They didn't conquer the world with an army or by building a flashy consumer product. They did it with something much more powerful: invisible influence. Today, we're going deep into the empire of BlackRock. We're talking about the secret software that monitors the world's financial nervous system, the man who can move markets with a single letter, and why some people think this company has become more powerful than the governments meant to regulate it. To understand how we got here, we have to go back to 1988. But the story actually starts even earlier with a massive failure. In the mid-80s, a man named Larry Fink was a rising star at an investment bank called First Boston. He was a pioneer in the mortgage-backed securities market, basically turning home loans into tradable assets. He was a genius, right up until he wasn't. In 1986, a catastrophic miscalculation in interest rates led to his team losing $100 million in a single quarter. On Wall Street, you're only as good as your last trade. Fink was out. But that failure didn't break him, it obsessed him. He realized that even the smartest people on Wall Street were flying blind because they didn't truly understand risk. So in 1988, Fink teamed up with 7 other founders to start a new kind of firm. They initially got a $5 million credit line from the Blackstone Group, which is why they were first called Blackstone Financial Management. The goal was simple: provide asset management services with an obsessive focus on risk. Within months, they were profitable. By 1989, their assets quadrupled to $2.7 billion. But Fink and Blackstone's founder, Stephen Schwarzman, eventually bumped heads over equity and hiring. In 1994, they split. Schwarzman sold Blackstone's stake in the company for $240 million, a decision he later called a heroic mistake because that company became BlackRock. The rise of the Big Three now, if you look at the stock market today, you'll hear people talk about the Big Three. That's BlackRock, Vanguard, and State Street. Since 2008, there has been a massive shift in how the world invests. People moved away from active funds, where a human manager tries to pick winning stocks, and into passive index funds and ETFs. These funds simply track a market index, like the S&P 500. This shift was a goldmine for BlackRock. By 2011, they were added to the S&P 500 themselves. By 2014, they were officially the world's biggest asset manager. But here is where it gets crazy. Because BlackRock, Vanguard, and State Street dominate the passive index fund market, they have ended up owning a piece of practically everything. Research shows that the Big Three together are the largest shareholder in 88% of all S&P 500 companies. If you look at the top companies in the world, Apple, Microsoft, Alphabet, Amazon, Tesla, BlackRock, and Vanguard are almost always the top 2 institutional investors. Think about that. In 1932, economists talked about the separation of ownership and control, meaning ownership was so spread out that no one had real power. But today, we've seen a reconcentration of ownership. BlackRock says they don't own these shares, their clients do. And that's technically true. But BlackRock is the one that gets to exercise the voting rights attached to those shares. This gives them enormous leverage over corporate boards and leadership. Aladdin, the secret weapon. While the ownership of shares is impressive, BlackRock's true power might actually be hidden in a computer room. It's a technology platform called Aladdin, which stands for Asset, Liability, Debt and Derivative Investment Network. Fink and his team started building it in the early days to understand risk, but it grew into something legendary. It isn't just software, it's an AI-driven surveillance system for the global economy. Aladdin uses big data, machine learning, and real-time computing to track millions of trades and analyze risks like market fluctuations, geopolitical shifts, and even climate change. It is so good at what it does that almost everyone uses it. Banks, insurance companies, pension funds, and even official government institutions rely on Aladdin to monitor their portfolios. It's estimated that Aladdin keeps track of investment portfolios for many of the world's major financial institutions. This makes BlackRock the invisible infrastructure of modern finance. When the 2008 financial crisis hit, the U.S. Treasury actually hired BlackRock Solutions to help untangle the toxic assets held by failing giants like Bear Stearns and AIG. They were the only ones who had the data and the tech to see through the smoke. This role effectively moved a private corporation into a position of state-level advisory power. The ESG war, because BlackRock is so large, Larry Fink has realized that the company can't just be a passive bystander. Every year, he writes a letter to CEOs that essentially sets the agenda for corporate America. In recent years, he has pushed hard for something called ESG, environmental, social, and governance investing. He calls it stakeholder capitalism. The idea is that a company must create value for its employees, customers, and communities to deliver long-term value for its shareholders. Fink argued that climate risk is investment risk. He pushed companies to disclose their carbon footprint and increase diversity on their boards. But this push for conscientious capitalism sparked a massive political firestorm. On one side, environmental activists say BlackRock isn't doing enough. They point out that BlackRock is still one of the world's largest investors in coal and fossil fuels. Some studies even found that 91% of BlackRock's sustainable funds were still invested in fossil fuel companies. On the other side, U.S. conservatives accused BlackRock of pushing a woke or progressive agenda and using their influence to bypass the democratic process. The backlash has been real. States like Florida, Louisiana, and West Virginia have pulled billions of dollars out of BlackRock in protest of their ESG policies. In West Virginia, they were even barred from doing business with the state because of their perceived boycott of the fossil fuel industry. By 2023, Fink admitted he stopped using the term ESG because it had been weaponized. But he insisted he wasn't ashamed and still believes in the core principles of his mission. The China controversy and global ties. BlackRock's influence doesn't stop at the U.S. border. In 2021, they became the first global asset manager to get approval to start a wholly owned mutual fund business in China. They raised over $1 billion from Chinese investors almost immediately. This move was called a tragic mistake by billionaire George Soros, who argued it would damage U.S. national security. In 2023, the U.S. House of Representatives launched an investigation into BlackRock, alleging they funneled hundreds of millions of dollars into Chinese companies that were blacklisted for human rights violations or for aiding the People's Liberation Army. Beyond China, BlackRock has been coordinated with President Zelensky on the reconstruction of Ukraine. They have also faced scrutiny over investments in companies linked to the conflict in Gaza, with a UN report listing them as major investors in tech and military firms complicit in the crisis. And their ties to the U.S. government remain tight. During the COVID-19 pandemic, the Federal Reserve chose BlackRock to manage massive corporate bond buying programs. Critics pointed out that this effectively gave BlackRock an inside track to influence the Fed's decisions, though BlackRock pledged to forego profits from the program. Key insight: common ownership here is the most important takeaway, and it's something most people don't think about. It's called common ownership. Think about the airline industry. If BlackRock and Vanguard are the top shareholders of Delta, United, and American Airlines, do those airlines really have an incentive to compete on price? If one airline cuts prices to win customers, it might hurt the profits of the other two, and since BlackRock owns all of them, a price war is a zero-sum game for them. Researchers have found that this common ownership might actually lead to higher prices for consumers. One study found that in the U.S. airline industry, common ownership contributed to ticket price increases of 3% to 11%. Another study found it led to higher fees in the banking sector. BlackRock calls this theory vague and implausible. But in their own 2023 annual report, they admitted that regulators are looking at common ownership as a potential business risk that could affect future mergers and acquisitions. Why it matters: techno-feudalism. So why should you care? Economist Yanis Varoufakis argues we are moving into a new era called techno-feudalism. He says that big tech companies and the firms that own them have moved beyond traditional capitalism. In this world, we aren't just consumers, we are cloud serfs. Every time we scroll or click, we are producing data for digital overlords. And firms like BlackRock provide the cloud capital that powers this entire system. When power is concentrated in the hands of a few people who own the algorithms and the shares of every major company, it becomes a hyper-concentrated source of economic power that's almost impossible for any single state to check. Senator Elizabeth Warren has even suggested that BlackRock has become too big to fail and should be regulated like a massive bank. BlackRock is a financial superstructure woven into the very foundations of the modern world. They manage your retirement, they advise your government, they track the world's risks, and they own a piece of the phone you're holding right now. Is it a new finance capitalism that provides stability and long-term growth? Or is it an invisible empire that has grown too powerful to be stopped? The reality is that we all live in a world that BlackRock helped build. And once you see their name at the top of every list, you'll never look at the global economy the same way again. Thanks for watching.